Have you ever noticed what happens when you walk into a car dealership? The salesperson smiles, hands you the keys, lets you test drive a shiny new car, and then asks one simple question. How much do you want your monthly payment to be? It sounds harmless, but that single question has quietly cost millions of people thousands, sometimes tens of thousands, of dollars. Because the biggest money trap at the dealership isn't the price of the car. It isn't even the interest rate. It's getting you to think about the monthly payment instead of the total cost. That's exactly how someone walks in planning to buy a $30,000 car and walks out committed to spending $55,000 or more over the next several years. The scary part? Most people never realize it happened. Right now, the average new car payment has climbed to levels that would have sounded unbelievable just a decade ago. Add insurance, fuel, maintenance, registration, repairs, parking, and subscription features, and many drivers are quietly spending over $1,000 every month just to own a vehicle. That's money that could have gone toward investing, buying a home, starting a business, or simply giving yourself breathing room every month. Instead, it disappears into something that loses value almost every single day. Now, don't get me wrong, cars are important. Most people genuinely need one. The goal isn't to shame anyone for buying a vehicle. The goal is to make sure you don't accidentally buy a financial burden disguised as a status symbol. Because dealerships aren't charities, they're businesses. And like every business, they make money. Lots of it. But here's something most buyers never realize. The car sitting on the showroom floor often isn't where the dealership earns the biggest profit. The real money is made after you've already decided to buy. That's where the hidden traps begin. And today, we're exposing every single one of them. By the end of this video, you'll know exactly what to watch out for before signing anything. You'll understand why two people driving the exact same car can end up paying wildly different amounts. And I'll give you a simple checklist you can use before your next dealership visit so you know whether you're making a smart financial decision or walking straight into an expensive mistake. Let's start with the first trap. And honestly, it's so common that almost everyone falls for it. So, what's the biggest trap? It starts before you even look at the price tag. The moment you sit down with a salesperson, the conversation usually goes something like this. So, what monthly payment are you comfortable with? Sounds like a reasonable question, right? But here's the problem. When you focus only on the monthly payment, you've stopped buying a car and started buying debt. Let's say you tell the dealership your budget is $500 a month. They now have several ways to make almost any car fit that number. They can extend your loan from 4 years to 6, or even 7 years. They can increase the amount you finance. They can roll extra fees into the loan. They can add warranties, maintenance plans, gap insurance, paint protection, wheel protection. And before you know it, you've signed paperwork for a vehicle that costs thousands more than you ever planned to spend. Your monthly payment stays almost exactly where you wanted. But the total amount you pay quietly explodes. That's why smart buyers don't ask, "What's my monthly payment?" They ask, "How much will this vehicle cost me from the day I buy it until the day I sell it?" That's a completely different question, and it changes everything. Because buying a car isn't just buying a car. You're buying years of expenses. Think about it. Fuel, insurance, oil changes, tires, registration, unexpected repairs, parking, car washes, accessories, and nowadays, even subscriptions. Yes, subscriptions. Some manufacturers now charge monthly fees for features your car already has. Imagine buying a phone and then paying every month just to use the camera. Sounds ridiculous, but that's exactly where parts of the automotive industry are heading. And those little monthly charges don't look dangerous. $10 here, $20 there, $30 for another feature. Individually, they don't seem like much, but over 6 years, Those tiny charges quietly become thousands of dollars. This is why wealthy people often think differently. Most people ask, "Can I afford this payment?" Wealthy people ask, "What is this decision going to cost me over time?" It's a small shift in thinking, but it completely changes the outcome. Because money isn't usually lost all at once, it's lost a little bit. Every single month. If this video is helping you think differently about one of the biggest purchases most people ever make, take a second to subscribe to the channel. Every week, we break down money mistakes, investing, saving, and personal finance in simple language, so you can make smarter financial decisions and keep more of your hard-earned money. Now, there's another trap that's even more expensive, and this one doesn't happen on the showroom floor. It happens in a small office at the very end of the buying process. Ironically, it's where the dealership often makes the easiest money. Most buyers walk into that office thinking the hard part is over. In reality, the negotiation is just beginning. By the time you reach the finance office, you're probably tired. You've spent hours walking around the dealership. You've test-driven the car. You've negotiated the price. In your mind, the deal is done. But for the dealership, this is where another opportunity begins. The finance manager isn't just there to print paperwork. Their job is to offer products that increase the dealership's profit, and many of those products sound incredibly convincing. You'll hear things like, "For just a few dollars more each month. This will protect your investment. You'll have complete peace of mind." Notice something? They've gone right back to talking about the monthly payment, not the total cost. Let's say an extended warranty costs $3,000. That number sounds expensive, but if it's added to a 6-year loan, it suddenly becomes only another $38 a month. $38 doesn't sound like much, and that's exactly why it's presented that way. Because your brain naturally compares $38, not $3,000. The same thing happens with paint protection packages, fabric protection, nitrogen-filled tires, VIN etching, roadside assistance plans, window protection, wheel protection, key replacement coverage. One by one. None of them seem expensive, but stack 5 or 6 of them together, and you've quietly added thousands of dollars to your purchase. Now, to be fair, some of these products can make sense for certain people. The problem isn't that they exist. The problem is buying them without understanding what you're actually paying for. Always ask yourself one simple question. If I paid for this separately outside the dealership, would I still buy it? If the answer is no, you probably don't need it inside the financing package either. Then comes another big decision. Gap insurance. This one deserves a little more attention. Imagine buying a brand new car for $40,000. A year later, someone crashes into it. Your insurance company values the car at only $31,000 because cars lose value quickly. But you still owe $36,000 on your loan. That leaves a $5,000 gap. And without gap insurance, you're responsible for paying it. That's exactly what gap insurance is designed to cover. So, unlike some dealership extras, this one can actually be valuable, especially if you're financing most of the purchase price with very little money down. The key isn't saying yes or no automatically. The key is understanding exactly what you're buying and whether it fits your situation. Because dealerships make the most money when customers feel overwhelmed. The faster you sign, the fewer questions you ask, the better it is for them. But here's something even more expensive than dealer add-ons. It's a mistake people make before they even walk into the dealership, and it's responsible for thousands of dollars in unnecessary interest payments. If you avoid this one mistake, you could save more money than saying no to every add-on combined. Let's talk about your credit score. Now, let's talk about one of the most overlooked parts of buying a car, your credit score. Most people think a credit score is just a number. In reality, It can determine whether you keep thousands of dollars or hand those thousands over to the bank. Let's look at a simple example. Imagine two people buy the exact same car, same dealership, same day, same price. The only difference? One has excellent credit, the other has poor credit. The first buyer qualifies for a low interest rate. The second buyer doesn't. Over the next 6 years, they'll both drive the same car, but one of them could end up paying several $1,000s more, simply because borrowing money was more expensive. That's money they'll never get back. This is why buying a car starts long before you visit a dealership. It starts with improving your credit, paying your bills on time, reducing unnecessary debt, and shopping around for financing before you ever walk through those showroom doors. Because here's another mistake people make. They assume the dealership has the best financing. Sometimes they do. Many times, they don't. Banks, credit unions, online lenders, they all compete for your business. And just spending an hour comparing rates could save you thousands over the life of your loan. Now here's another trap that's becoming incredibly common. Long loan terms. Years ago, a 5-year loan was considered normal. Today, 6, 7, even 8-year car loans are becoming more common. At first glance, they seem attractive. Your monthly payment drops. The car suddenly feels affordable. But here's what's really happening. You're stretching the debt over more years, which usually means paying more interest, more time owing money, and a much greater chance that you'll owe more than the car is worth. Imagine still making payments on a car that's already starting to need expensive repairs, or worse, wanting to sell it, only to discover you still owe more than someone is willing to pay for it. That's called being underwater on your loan, and it's a financial position you never want to be in. The goal isn't to chase the lowest monthly payment. The goal is to become debt-free as quickly as you reasonably can. A shorter loan usually means higher monthly payments, but far less interest, less financial stress, and much sooner, you own the car outright. If this video has already changed the way you think about buying a car, make sure you subscribe. My goal isn't just to help you save a few dollars, it's to help you avoid financial mistakes that can cost thousands over your lifetime. Every week, we break down personal finance, investing, saving money, and wealth-building strategies in simple, practical language. Now, we've talked about dealership tricks, hidden fees, interest rates, long loan terms. But there's one final question. How do you actually know whether a car is affordable for you? Because just because a bank approves you doesn't mean you should buy it. And that's where one simple rule can save you from years of financial stress. So, how do you know if you can actually afford a car? Here's the truth. The bank is the worst person to ask. Why? Because the bank is answering a completely different question than you are. You're asking, can this car fit into my life without hurting my financial future? The bank is asking, can this person make the payments long enough for us to earn interest? Those are not the same thing. Just because you're approved for a $60,000 loan doesn't mean you should spend $60,000. Remember, approval isn't affordability. One of the easiest ways to protect yourself is to calculate your total monthly transportation costs before you ever visit a dealership. Not just the loan payment, everything. Insurance, fuel or charging, maintenance, registration, parking, car washes, unexpected repairs, and yes, those monthly subscriptions that seem small today but quietly grow over time. When you add everything together, you may discover that the car you thought would cost $600 a month is actually costing you closer to $1,000. That's the number that matters, because every extra dollar tied up in a depreciating asset is one less dollar building your future. Think about what that money could become instead. If you invested just $500 every month instead of spending it on a more expensive car, Over time, that money could grow into tens or even hundreds of thousands of dollars, depending on how long you stay invested. That's the real cost people never calculate. It's not just the money you spend, it's the wealth you never build. And here's something worth remembering. Nobody at a traffic light knows your interest rate. Nobody knows how long your loan is. Nobody knows whether you're financially stressed every month just to drive that car. People might admire your vehicle for 5 seconds, but you have to live with the payments for years. Real wealth isn't looking rich. Real wealth is having options. It's having savings when life throws you a surprise. It's being able to invest consistently. It's sleeping well because your bills don't control your life. The smartest financial decision isn't always the most exciting one. Sometimes, it's driving a reliable car that's completely paid off. Sometimes, it's keeping your current car for another 3 years. Sometimes, it's saying no today so your future self can say yes to something much bigger. Financial freedom isn't built with one perfect decision. It's built by making good decisions over and over again, and buying the right car, at the right price, for the right reasons, could be one of the biggest financial wins you'll ever make. If you found this video helpful, don't forget to hit the like button and subscribe to the channel. Every week, we break down personal finance, investing, budgeting, and wealth-building strategies in simple language that anyone can understand. If this video helped you avoid even one expensive mistake, then it was worth watching. Thanks so much for spending your time with me today. I'll see you in the next video.